Hello guys and welcome back to the channel. So today is a very exciting video to make, and I'm going to talk to you about the 4 flaws of Palantir that make it, I believe, a once in a 10-year stock. You know, every once in a while there comes a company just keeps on growing year after year. Tesla was an example like that. Google was an example from 2 decades ago. So I believe Palantir is one of these companies, and it has 4 flaws that make it look really bad. And this is awesome for us as investors, because if it was obvious that Palantir is amazing, everybody would be buying it and you wouldn't have any opportunities. So I want to go through these points with you and help you make up your mind about Palantir. I personally have 100% of my don't touch portfolio invested in Palantir, and I'm looking at ways how I can get more money so I can put more money, invest more money into Palantir. Hopefully the price will drop so I can go even more. I'm at the point of thinking about my organs, so if you're interested, let me know in the comments and maybe we can make a deal. Obviously I'm just kidding, but let's get into the video. So number 1, or the first point that makes Palantir really good, is that they're secretly profitable. So as you know, the market hates unprofitable companies right now, and Palantir is being punished. However, when Palantir did a direct public offering, they didn't do an IPO, they did a DPO, and Alex Karp, the CEO of Palantir, explains in many interviews that they didn't know that they were going to do a DPO, and it was kind of fast, and then they had a lot of stock-based compensation planned, which is very normal for companies. This is used for employee retention. And here's the deal. So because the system is it was messed up and not really planned, right now they have a lot of stock-based compensation, which is going to the employees. But Alex Karp has confirmed that they are going to normalize this, and within a few years they're going to be like any other stock market company, like Apple, Netflix. All these companies all offer stock-based compensation, and it's a fantastic way to retain top talent. So why is this a thing? If you look in their Q4 investor presentation, so they're showing you this table, right? And they show the GAAP operating margin, which is when you keep all the bookkeeping rules. Then they lost 14% on their income, right? But if you take out certain numbers, and why is this important? Because when you give stock-based compensation, it's essentially like printing money, because you print new stocks, you give it to the employees, and it doesn't cost you any money out of your bank account. However, per the bookkeeping rules, you need to add this to your bookkeeping, and it becomes a minus in your bookkeeping, but it's not, no money left the company. So it's essentially just a minus in your bookkeeping. And the investors that don't look deeper, what do they see? They see, oh my God, this is minus 14%. But us smart people, when you look a little bit deeper and you start reading, so here is a reconciliation of their financial year 2021. You can see that they had minus 411 million per the bookkeeping results, right? And now if you add back in how much they spent in stock-based compensation, which was 778 million, guys, we need to be working at Palantir. That's some pretty nice pay. And then how much tax they paid on this, 106 million. So when you add these things back, then you have a profit of 473 million. So basically, already now they are making profit cash flow. I understand per all the bookkeeping rules, they're not allowed to show this profit. But imagine that they're still growing, they're still bettering their margins, and this $800 million of stock-based compensation is going to go away next year, or for sure the year after. And this makes it amazing for us who can think with this data, because this really pushes the stock price down. So the next thing that is amazing about Palantir is that the market really, really, really hates growth stocks right now. Here is a chart of Cathy Wood's ARK Invest, and I think that they're a great representation of growth stocks in general. And if you look at it since, oh my God, now you got to see that I'm cheap and not upgrading my TradingView account. So here we go. So you can see that from basically February 2021, growth stocks have been hammered, and pretty much any growth stock that you look at is 60-70% down. And by growth stock, the market means non-profitable companies with unproven business models, right? And somehow, for some reason, Palantir is also grouped into this. And then on top of it, in November, that's when the fall really started happening. The Fed started saying that they will increase the interest rate, which even further hurts the valuations of growth companies. And then, on top of it, to add salt to injury, a war broke out. And who the heck knew that this war was going to break out? And so now you went from bad to very bad to catastrophe. And then now, because of the war, the commodity and the oil prices are skyrocketing, which basically pushed the stock market into an unreal low. So now, listen to me. If you have a 5-year time horizon, when would you want to buy stocks? Would you want to buy it when it's on the way up and it's at peak FOMO and, you know, very high valuation? Or would you, it's just some food for thought, would you want to buy it when it's peak fear in the market and nobody wants to have anything to do with growth stocks? So obviously the answer is you would want to buy it now. It might be a little bit scary because who knows what happens in the short term. Maybe it will continue to go down. But here's another thing. You know, so if you look at what's happening. So, okay, the unprofitable companies are being hit, but Palantir is secretly profitable. Okay, the oil prices have gone up and commodities and inflation is really bad, but Palantir is not making anything physical. For them, they have an 80% gross profit, so they can very easily afford, they're very inflation proof, okay? And then you look at, okay, is this war helping or hurting their business model? So the thing is, if you listen to their earnings call, the CEO have confirmed many times that when there's uncertain times and people need data, and Palantir is a data company, it becomes a tailwind for them. For example, they got a lot of business in the financial crisis of 08 and 09. And they have had a hard time to expand in Europe because the European governments and companies were afraid, you know, that data is being processed in the US and blah, blah, blah. But guess what? This Russia-Ukraine situation was a great catalyst for Palantir. And I believe that, as the market is scared and selling off stocks, I think that this made the TAM, the addressable market, and, you know, everything better for Palantir. I believe they're going to get a ton of business from Europe, so they're actually winning on this war. So the fact that they're going down or the market is going down and there's a sell-off is a complete misreaction from the market and a complete mispricing that I highly advise you to take advantage of. So now the third thing that makes Palantir is a weakness for Palantir, but is a strength for us who can use our brains, is that apparently the government sales of Palantir has been slowing, and this is why Cathy Wood has sold off the company, which I think was not really the case, but she was narrowing down on other things that she was more convinced in. But the point is that, you know, this was printed in newspapers, and I mean, obviously, if you look in the earnings call, you can see here that the government was growing 76% in Q1, 66% in Q2, 34% in Q3, and 26% in Q4. So, oh my God, 4 years of falling government growth. What are we going to do? So, smart investors get more data. So here is what Mr. Alex Karp has to say about this.
And just a quick follow-up on the government. I know you had a tough comp. It did decelerate pretty materially in Q1 in terms of the growth. Can you give us your perspective on what's happening on the government side?
Well, there's a couple things that are happening there. So if you were looking at this more like from a scientific perspective, you had a time series that's 15 years. First thing you would do is say, okay, what's happening in that time series over the 15 years? What you see in U.S. Gov is a compounded growth of 30%, but like this, which is, you know, the positive of U.S. Gov is it's reliable. The sums are big. The quality of the revenue is very high. There are a number of problems, but biggest problem is barrier to entry, which we've clearly solved, and then re-barriers to entry, which we've solved or are solving, but that's going very well. And then The second one is lumpiness. Now that lumpiness still exists, and actually in some ways it's worse, because to get the integral to grow, you need these massive deals. We also have small deals, but de facto we are on the biggest, most important parts of the U.S. government.
So basically, very important here that he says that as they are so big now in the U.S. government, that they, like, for them to really move the needle, they need massive deals. So that means that when they close a massive deal, obviously they have an 80% expansion that quarter, but when they don't close a deal, then maybe it's just a 10% increase. So very important to keep in mind.
Software is so there's really a twofold answer to your question. One, what will happen this year? Is the deceleration an actual one over a long time series? The answer is clearly no. But then the question is, if the baseline is 30, how does it get to where we want it, which was like the beginning of last year and not at the end of last year? And the way that happens is the deals were already positioned to win actually close. And so then you get into the granularity of what will happen in the U.S. government, who gets the deals if there's no new budget.
So I believe this is all that we needed to hear. So very good explanation. And keep in mind, there was no new budget in Q4 2021 in the US government. So it was very hard to know what money goes where. And I guess now that the budget is approved, it's obviously a lot of it is going to go to Palantir. So this is a non-issue that bothers the market, and a lot of people are selling and making an amazing discount for us long-term investors. So now the fourth weakness or flaw of Palantir in the eyes of outside investors is that they have invested a lot of money into SPACs. And SPACs are companies that came recently on the stock market. And some investors, the way they look at it is that they were basically falsely buying revenue because they bought ownership in these companies. And then obviously as an owner, they're like forcing these companies to buy their own products, and this is not fair, and then it becomes that they're hiding something. So the thing is, I had to do a little bit of digging into this. So first of all, it's not such a big deal for like the revenue that they get from these packs. If you take that out of their growth, they're still growing at 26%, from 29 to 26, I believe. Don't quote me on these numbers, but it's something very minute, right? And then the second thing is, what I have found, again, this is where you make your money, you look where others are not looking, is that contracts that they get from these SPACs far outweigh the investments that they have made in these SPACs. So let me show you what I mean. So here's an article by Seeking Alpha, and I can link it in the description below if you want to read it. But here it is. Palantir's platform is unlocking substantial value for companies it is investing in, as it provides contractual agreements for utilization of Palantir's products and services over the course of 3 to 10 years, depending on the agreement. These investments provide maximum potential revenues of $640 million to Palantir, a 68.7% return on the $379.5 million invested. That's a bit funny because the numbers, okay, whatever, I just believe, but it almost looks like a higher return. These customers are already quite satisfied, as such as Babylon, as Palantir has helped it bring more integrated and intelligent approach to its services, as well as integration of over 100 Babylon data sources, resulting in over 80 billion data points and enabling the organization to accelerate its AI-enhanced capabilities. Basically, the thing is that this is a non-issue. It's such a small part of Palantir's expansion and income. And these companies might blow up, they might not. I believe they're also being punished like all other growth companies, so it actually hurts Palantir's balance sheet. But the deals that they get out of this is substantially greater than the amount of money that they're investing in. And if you also read their 10K form that they have submitted, it also stands there that basically via these investments they get access to different industries, and they can basically learn these industries, and then they can sell to different customers because they have experience in this industry. So it actually can be a quite smart thing, and it doesn't bother me at all. So these were the 4 points. By the way, if you like this video, please make sure you hit the subscribe button. So these were the 4 points that I believe make Palantir a once in a 10-year investment. And I am 100% invested already, about $40,000 that is in Palantir from my Don't Touch portfolio. Let me know what you think about Palantir. Are you going to go into it or not? And I will see you in the next video. Ciao, ciao.